It's Top That Trade Day. Joining us for that, Phil Flynn, a Fox Business News Network contributor, and Alan Knuckman, the chief market strategist for BullseyeOption.com, here for our trader game. Round number one, guys, high jump. The futures market is pricing in a March rate hike. Would a 0.5% shock and awe you?
I think that we're doing it a little bit. The 90% chance there's going to be a hike in March. It's just a matter of how much. But more importantly for me, the total for the year end is still going to put us at a 1% rate on short-term rates. But more importantly than that is how the market reacts. Typically in the past, we've had 5 rate hike periods since 1989, and the average gain in the S&P was 60%. So that's what I'm more concerned with.
You're absolutely right. In the beginning phase of a rate hiking session, the market normally goes up, but if you look at the back end of the session, it normally calms down a little bit. That's the history. Maybe this time will be different. We don't know, but I'll tell you right now, there is obviously some concern by a lot of markets if you look at the yield curve of the rate at when the Fed is going to act. So the Fed is going to really have to thread the needle. This is going to be one of the most important rate hiking periods in history because they're going to have to try to slow down inflation without putting us into a recession. And let's face it, the track record on the Fed when they get into a rate hiking cycle normally ends up in a recession. So hopefully they can do it better this time and, really thread the needle about not too hot, not too cold, and a soft landing. It's going to be tough.
Round number 2, juicy gains. In Florida, orange growers are dealing with the smallest crop since 1945. OJ has been on the move. Can more gains be squeezed out?
Is anybody drinking orange juice anymore? I mean, that's the problem. We have the smallest crop we've had since 1945. Also, consumption is not what it used to be. And one of the things, even when orange juice was one of the most popular drinks in the market, was elasticity. When the price of orange juice went up, people had a tendency to cut back. That's even more true today, where people will drink less if prices go up. And we have a lot more alternatives than we had, say, 20 years ago to get vitamin C and other types of drinks than we did back then. Having said that, it's really a shame because U.S. oranges used to be the best in the world. The citrus greening disease, which has devastated that crop, I hope the orange juice industry comes back in Florida. I hope they find a cure for that disease. I do think orange prices can have another spike here. I think eventually it's going to run out of steam because the demand will drop. But I think for the short term, you got one more pop coming in this juice.
It was a combination of a couple things. Obviously, the smaller crop. Some people are actually going back to juice since they're being at home during this COVID time and getting back to basics. But as a price guy, you've seen orange juice trade between $100 and $200, $1 and $2 for the last 5 years. And right now it's at the midpoint. So it's not really high, even with a small crop. But technically speaking, if it breaks out of that $2 level, then you could see $3. And orange juice is the kind of market that can have overreactions to fundamentals. And we also have to consider what's happening in Brazil. Their orange crop has not been significant enough for exports. So that's part of the equation as well.
You guys are doing terrific today. Round number 3, wage inflation. Goldman Sachs compensation was up 33% last year, with the average right around $400,000 per person. The stock has gone from $250 to $400. So is the wage warranted, and is that record pay too much to play? Goldman Sachs.
I think when you're looking for talent, it's not too much. I mean, we're in an environment right now where you have to pay to play, so to speak. Listen, this is the best environment for workers and salaries in a very, very long time. That's the positive side. The negative side, of course, if you're not making the Goldman Sachs like salaries and you're getting pay increases, the question is whether we'll keep up with inflation. And on the low end of the pay scale, that's not happening right now. It's just not. People are struggling right now on the low end of the scale. So the rich are doing fine. The poor aren't doing as well. Now, we're hopeful that inflation does get under control a little bit. So the lower end of the wage spectrum starts to see some benefits. But right now, they're barely keeping pace.
Well, Goldman Sachs, you talked about it, up 60% the stock price last year. So the traders got a 33% raise. That's nice. But as far as trading that stock, it's an expensive stock and it's near the $350 level. So I look to trade XLF, which is the ETF that tracks all the financials. They've had a pullback. XLF is about 5% off its highs. Goldman Sachs actually 15% off its highs. XLF has been trading between 35 and 40 for 9 months. It targets 45, which is about 10% higher. So I like that as a way to play the whole basket of financials because they're going to continue to perform, in my opinion.
Well, here's your bonus round question for today. True or false, Taco Bell is starting up a business school?
True.
That's such an obscure question that I would have to ask. Yes.
It's taco true. You guys crushed it this week. Business First AM continues right after this. Nachos on the house. Go to businessfirstam.com for where to see our show on TV.